Should we buy or sell Sony? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, Sony Computer Entertainments, it's in the interactive entertainment theme in the megatrends. On average, we do have a 35% move from the 52-week low, but minus 37% away from the highs, which is, very much in bear market territory. So yeah, they are the company behind the PlayStation, 3.36% away from the 52-week low, minus 39% away from the highs. So quite, a significant haircut. Here is the company's website, and here you can see some of their games. Horizon. You also had God of War here. So yeah, they do have a very good portfolio. So this seems like some kind of new controller. Introducing Backbone 1 PlayStation Edition, an officially licensed controller for PlayStation. Oh yeah, so this enables you to play your PlayStation games on iPhone through PS Remote Play with ease. So this is very interesting. So yeah, because a major problem now with the next gen consoles is that it's very difficult to get them. But at least you can play the previous generations of games, and there's quite a lot of great games out there. So, I mean, myself, I have a long list of unplayed games. But of course, I would like to experience the next generation. But yeah, there's great content out there, and the graphics for the previous generation, it's also pretty good. I think that everything after like the PlayStation 2 is still high. Well, from the PlayStation 2 onward, is very playable. Some of the PlayStation 1 games, the graphics can be a bit jarring, but PlayStation 2, yeah, pretty good even today. Okay, so here is the chart of Sony. We have a lot of history here. You can go way back. The very important moving average in play at the moment is this red 200-week moving average. It's been a big deal in the past as support, but also here as resistance. So the bears and the bulls have made good money playing that moving average. We are very close to testing it again, so let's measure how far away we are from it. Yeah, around 1-ish%. Back here, tested surgically 2 times, so we definitively expect that to happen. If we were to see some close below, that obviously would be a pretty bad signal. So it's a very important week ahead. You can see that this purple 20-week moving average it's been a problem here for the bulls. The bears come back there to just short. Looking at the daily data points, the bears are using this blue 100-day moving average to put on their short positions and very easily making money, as you can see. And that also increases the probability that the bears will do it again. So there's a lot of psychology in the market. When you have some indicator that works out, whether it's bullish or bearish, it can become self-reinforcing because you have people who were bullish on Sony who now will be attracted to shorting resistance levels, either to go full bear or to also hedge their positions. One of the ways they could do it is to just look at the technical signal and then, let's say, buy some puts in order to hedge some long positions. So here are the other indicators. We are emerging from a low RSI level that has triggered some longer term rallies in the past. But we have seen price breakdown a bit more, so it hasn't worked out like it used to do. Looking at the daily data points, we are low, but we are not at lows that are like super buyable. What I do find very interesting is that there is a bullish divergence between price and accumulation distribution. So there are some whales out there building positions in Sony. So I write 200 weekly moving average support as the entry signal. I give the bulls a 6 here on the technicals, but that is very contingent on support working out. If we were to see a close below the 200 weekly moving average, then this 6 would degrade to a much lower number. So here is the seasonality here. To the right here, the green line shows the average over the last 5 years. Seasonality is usually bullish into mid-September. Blue here over the last 7 years, bullish into mid-ish September, and red also the same thing. To the left, over the last 5 years, you see that September, October, November, December are very strong months for Sony, which is bullish. Looking at the last 10 years, from August to September, October, November, the seasonality strengthens very substantially, which is, of course, bullish at the last 20 years. So August is actually, it is the weakest month. However, September is more 50-50-ish, and then October comes with a vengeance as the strongest month. This is very interesting. So I will give the bulls a 5 here on the seasonality. We are not yet in September, but pretty soon. And the seasonality here is rather favorable. So yeah, this is a great opportunity here for the bulls. And if I was a bear, I would definitively consider tightening my stops here, because this is not the type of seasonality you want to face if you have like a big short position. So let's look at the fundamentals. So Sachs has a number 3 hold for Sony, but there's a B value score, degrowth F momentum, industry rank bottom 30%, audio video production, market cap 101 billion US dollars. There is a yield here of 0.48%, but it's almost like negligible yield. We don't get any information here about insider activity. Okay, only one S. So let's look at Sony here, the US listed stock. The consensus estimates shows us that of the 19 analysts covering the stock, they end up with an average 38% upside price target. Highest is 77% above us, and the lowest, the biggest pessimist out there think there's a 2.52% upside. So I will give the fundamentals a 6 here on Sony. This is a tech stock, nice value and nice price targets, even a tiny bit of yield as well. So I think that this is all in all, it should be attractive to those who look at fundamentals. So let's look at relative performance. We have 91% correlation with the S&P 500, 93% here with technology and the technology ETF, the XLK, and 91% if we round up with the gamer ETF, video game industry. And then you do have minus 41% here with the dollar index. Short term, 82% with S&P 500, 84% here with the tech ETF, 96% with the gaming ETF, and then minus 91% with the dollar index. So looking both short and long term, the strongest correlation we do get is with the gaming ETF, but it was pretty close with the tech ETF. But here is the gamer ETF by Wedbush. In this case, talking about that red 200-week moving average, we are below it. So this is more bearish for sure. Looking at the daily data points, we do have something that potentially could turn into horizontal support here. But the bulls need to act soon because this is very fragile. MACD buy signal here on the weeklies. Looking here on the dailies, then you got a sell signal back here, when you saw that rejection here of that blue 100-day moving average, which has been very easy to short. I mean, you had like 1, 2, 3 3 opportunities to short it, and at this point you would be looking at approaching a 10% gain for a bearish trade. So here is Sony against the gaming ETF. we have seen Sony recently, outperform this ETF. We saw here that an inverse head and shoulders pattern developed, and so far we are seeing that bullish behavior. So if we go here and look at the seasonality for these two, yeah, so in blue here over the last 7 years, and also the green here over the last 5 years, we usually see Sony outperform the gaming ETF into like mid-September. And generally speaking, we do see some nice outperformance here leading into later into the year as well over the last 7 years, but it's a bit up and down. Here is the gaming ETF against the S&P 500. Okay, so if we look back here, we formed a double bottom that eventually worked out pretty darn well. We are not forming a double bottom yet, but we are close to that. So let's look at the seasonality to see what it projects. Yeah, the seasonality is, yeah, it's frankly bearish. I do give the bulls a 3 here on relative performance, so we do end up with a 5 here in favor of the bulls. The key entry signal stop loss is 200 weekly moving average support. Given the data at hand, we would expect that support to hold. It not holding would be a clearly bad signal. So we have some time left. So let's look at the components inside the gamer ETF. One of them is Roblox. So let's look at what's happening with it. We start here with the weekly data points, the chart. So the potentially very interesting thing happening at the moment is that this looks like an inverse head and shoulders pattern that could play out bullishly. Let's look at the daily data points. So the problem here is this 50-day moving average in green. We did close clearly below it on Friday. That doesn't mean that it's impossible to form an inverse head and shoulders pattern, but given this pattern, the setup for that pattern, that is, one would expect the bulls to do a bit more. The close below the 50-day shows that there simply were quite a few sellers out there, notwithstanding a historically pretty good pattern. Let's look at Unity Software. Yeah, so this stock, it's been through substantial rallies. Like here, let's measure it. So people were very bullish on Unity between this and this point, 171% gain. Then we had a major sell-off. We are forming a bit of a low here. Looking at the daily data points. Yeah, I mean, the green 50-day, it has been relevant in the past. So definitively one would expect it to function as support. It functioning as support would be a technically bullish signal. The problem is this blue 100-day moving average, which is also a very key indicator. In this case, it's pretty bearish. Let's look at these others. No, nothing in particular here. Bit of a sell signal here on the MACD. But yeah, I mean, there's interesting things here for Unity, but it's a bit weak. So here is Corsair. Ever since it went public and peaked here in February of 2021, it's been in a very protracted downtrend. What is super interesting here is this purple 20-week moving average, just ridiculously easy for the bears to short. But there's a fat but as well. Recently, the bulls have been able to flip it into a support level. So the bears can't short it anymore. Looking at the daily data points, the blue 100-day moving average is the key indicator. The bears are really trying to close us below it again, so it is super critical for the bulls to really buy aggressively that moving average. If the bears are able to get back into closing below it, then the bears will keep shorting. Another thing here is that we do have a bit of an inverse-ish head and shoulders pattern that could be developing. That is bullish. So when it comes to Sony, definitively very interesting developments when it comes to interactive entertainment more broadly. we do see some interesting action in the charts, um, potentially bullish, given that we see multiple charts with some interesting setups. That is very beneficial, but it's all dependent on self-reinforcing feedback loops. We need, increasing bullishness. So given that we have these very key events at the moment where the bulls really have to act, it also means that if the bulls are not able to buy, these obvious support levels, then you will see the bears get very aggressive and the bulls will really panic, because if key support doesn't work, it means that there's a lot more sellers out there on the fence, and that is, not good.